Our next panel is going to dive into the forecast for 2026 and give you the most accurate predictions they can. Now, the moderator of this next panel is someone who needs very little introduction, but let's give him one anyway. He has a show with 60 million viewers on CNBC. He runs a crypto hedge fund, and he recently published a children's book on crypto. Please welcome to the stage moderator Henri Arslanian.
Excellent. Thank you very much. Thank you, everybody. Bonjour Paris, c'est un plaisir d'être avec vous ce matin dans la plus belle ville au monde à Paris. Thank you very much, guys. I have my panelists join me as well. Guys, come on stage as well. Have a panel join. Guys, we're going to have a lot of fun this morning. Talk about what's happening as come on, guys, come on stage. As the forecast of the year today. My name is Henri Arslanian, as was described. I wear many hats. Grab a seat. I run a first VARA-regulated crypto hedge fund called 9 Blocks. I'm also the founder of the world's biggest crypto compliance services firm called ACX Compliance. And as was mentioned, where people know me, I'm the host of Crypto Weekly on CNBC Arabia and the host of the Future of Money podcast, where I think many of people know me. It's a pleasure being with you all today. My goal today is very, very simple. It's to really cover some of these big verticals, topics that we have on the outlook and what it means on topics like AI on crypto, stable coins, what's happening with institutional investors, regulations, payments. My goal is very simple. In the next couple of minutes, I want to give you all the information that we can, the latest trends, developments, and then let you make your own decision on what the impact could be on the industry, on your businesses, and most importantly, on each one of you personally as we look at this exciting space of crypto. And to do this, we have a dream team panel today with us, joining us. I'm going to start actually here on my left with Sabina. Sabina Liu is the managing director at KuCoin. This is the EU MiCAR compliant entity where she drives all the strategic development for Europe. One thing about Sabina you may not know, by the way, she was a semi-professional ballet dancer before. For 18 years, she was a classical ballet dancer. So here you go. You want discipline in crypto and compliance? You have it here. Sabina, great to have you with us today. Next, we're joined by Scott Shay, who's the founder of N3XT. It's a new US-chartered neobank. One thing, for those of you who have been in the space for a while, Scott is a true banking entrepreneur. He's the founder of Bank United of Texas, Merrick Bank, and Signature Bank. And he's the founder of Signet that many of us use until the former administration shut it down. You cannot say that. I can say it during the last Operation Chalkpoint 2.0. By the way, one fun fact about Scott you may not know, he's written 3 books on philosophy, religion, and a recent book on conspiracy theories in universities. So here we go. You think people in crypto are boring? We have a lot of exciting things outside of it. Scott, pleasure having you with us today. Then I'm joined by Raja Chakravorti. He's a chief business officer at Stellar, the Development Foundation, where he leads the global partnership in the investment strategy. One thing about Raj you may not know, he coaches basketball and softball in New York in his spare time. And his basketball team, by the way, for his daughters, is undefeated this year. Here we go as we head into playoffs. That's what we need. And hopefully we'll have some 3-pointers in the crypto space as well this year. Then it's Salvador Yañez. He's the Chief Product Officer at Movantis. It's Movantis, for those of you who don't know, it's a unified infrastructure platform, especially when it comes to cross-border money movements across the Americas. One thing about Salvador you may not know, he's a big triathlon runner, and he's about to do a race that starts in Alcatraz in San Francisco. Here you go. So I think President Trump wants to reopen Alcatraz. It's time to do that race before he does that. And last but not least is Marta Reyes. She's a senior digital assets research analyst at Fidelity, where she really focuses on the intersection of crypto and macro developments and institutional markets. Lots to talk about that today. And one thing, when she's not busy with Fidelity, she's very focused on charity work in Mexico, especially on financial inclusion. So a lot to be talked. So we have a dream team panel. I can't wait to jump into all this. I'm actually start. Ben right now was talking about agentic payments as we finished. Actually, Raja, I'm going to jump with you directly on this. We discuss this a lot. There's a lot of payment spaces moving a lot. There's a lot of changes. Do you believe this year we'll have the rise of agentic payments, especially as it relates to crypto?
I really appreciate the question. I think the reality is that it's going to move faster than some of the traditional players think about, but way slower than some of the crypto native builders think is going to happen. And I think the reality is, if you think about the structure, What we do have now is this infrastructure, which I think is really well set up to do it. Certainly, we've got the stable coins that are operational. We've got networks like Stellar that have deterministic finality. These are the types of things that are really important. And you now have kind of a regulatory environment that has started to give people the confidence to start to move forward in some of these areas. Certainly, the models themselves are very sophisticated. They can start to do it, and you've got these things like X402 from a protocol perspective that really allow this to happen. But if you actually look at the volumes, like the volumes are negligible. And I think the reality is you may have this for very specific narrow use cases. Certainly, if you think about maybe like an FX optimization flow, a corporate treasury optimization, maybe even a payroll sort of situation in a very narrow quarter. All of those things I think are in scope maybe over the next 24 months. What I don't think we're going to see yet is this idea of like an agent being able to operate at scale with open commerce initiatives. And I think the challenges there really are oriented around a couple areas. The first is around identity. But then also authorization. Now, I come from the open finance and open banking space before, and this is always a core challenge, which is how do you ensure that when a payment is made, that authorization actually happens at a consumer level at each and every instance, right? Like the AI itself may operate around a set of parameters, but that's a big difference between the human experience, which may not want to operate in those areas. So I think that's like one of the first premier challenges. I think another big challenge to this moving forward is just this idea of compliance is kind of oriented around the human experience. So if you think about like KYC, AML, like those checks happen based off of like a human sort of slowness to them almost to make sure that you're actually doing all those things, whereas an AI agent wants to be able to operate instantaneously. Now those two things are in conflict and there has to be some sort of alignment towards that. The third thing is liability. So ultimately, if you think about like a regulatory framework, like there is not clarity in any regulatory framework of what happens if that payment wants to be challenged or reversed or any of those items. I think the last thing I always think about, and I think this is maybe the scary part, is when you think about an agent-to-agent payment interaction, when you think about an agent, like it is typically optimized around what I want it to do, but the other agent is optimized around not the same parameters. And so when those two things start talking together, boy, like there's some explosive stuff that could potentially happen, and we haven't really unlocked what that looks like together. And for me, that's the big, long pull that's going to take multiple years to solve.
The liability topic is what keeps me alive. We're all excited about it. It's very sexy now, AI agent payments, but especially when an agent has a new agent and they're trading on their own, there's a whole issues that come up on that topic, right?
Yeah, and I think I'll just say one thing is that like the blockchains that are there, like a Stellar, which is not necessarily me pushing my thing, but let's say I'm pushing my thing, is that you actually do need the ability to have that deterministic finality for us to even talk about this making sense. But I think until there is a lot of alignment, we're going to have to see what happens.
Salvador, I'm just going to move it to you on what Raj mentioned on the compliance side. Right now, you mentioned identity, authorization, liability. How do you see this, especially because you guys are processing so many payments? Do you believe that compliance is going to evolve completely and we're going to be able to leverage these and tackle these issues?
Yeah, I definitely think so. Part of our thesis is, given the sheer amount, for example, of volume that we move in the traditional finance world, we have seen the great benefits that centralized good compliance can bring to the world. As Raja was saying, like when you start moving into a different world, what happens with identity? What happens with authorization? And very specifically, KYC and AML, right? As we see more institutional institutional investors and companies taking advantage of all these systems, we definitely need that compliance layer in order to be able to operate. We believe in the future, the winners are going to be those who can bring that compliance layer into the DeFi world. Because there's a lot of need to like also be able to know who's doing what, to be able to incorporate it into the more traditional systems. So the orchestration layer on top is what we believe is going to win the game here.
What do you think? Actually, Scott, I'll move it to you on this, right? So there's obviously this orchestration, compliance, all these elements of payment, agentic payments. I mean, you were the inventor of Signet, which many of us have been using for many years until it got shut down. Do you believe we're going to have something like that be mainstream, where we're able to use stable coins powered by AI and basically being used in the future on that? Are banks still okay with it? Are you think banks are willing to use such solutions, or there'll be pushback from the industry?
So I think we've talked a lot about today, and everybody, the leitmotif is how TradFi and crypto, the crypto universe are going to work together, and it's going to all be, you know, harmony. But I think that this is going to be the year when we learn that crypto and the traditional banking rails are actually at a very atomic level, not compatible. And what we're hearing from TradFi, and I have a, for those of you who are old enough, or maybe have read your history books, there used to be this thing called VHS and Betamax, and they had this big debate. And there were some people who created black boxes. And they said, just like the TradFi firms, trust the black box. You can put in your VHS, you can put in your Betamax. Here's this big, beautiful black box. And people paid a lot of money for this black box, and they didn't know any better. But if you actually remove the control panel, you'd see on the black box that it was, you were just inserting the VHS and the Betamax separately, if I've got this correct. You're just inserting, and there's all these various controls, and a lot of things that really didn't work well. So when people talk today about interoperability, I hear lots of places where things can go wrong. Lots of places, Roger's referring to it, lots of places where actually it doesn't work. And so what I'm really passionate about, to use that overused word, is that what we're trying to do at Next is to actually reinvent the banking system, not to enable the crypto system. That's what Signet was able to do. The great explosion of crypto happened because Signet provided the on and off ramps. And that was sort of like 1.0. Now what we're doing at Next is creating a narrow bank which has the ethos and the atomic properties of the crypto world. Our core operating system is a blockchain.
Can you explain to the audience what is narrow bank? I mean, I've written a lot about it. I'm shocked that it's not more mainstream. Just for the benefit of audience and those listening to this afterwards on the podcast.
Well, you're an OG on narrow banking, and you have written about it because, to me, it makes the most sense in the world. What we're doing is we've created a bank where, shockingly, we just don't lend out the money. We take all the deposited funds and put it in a T+0 environment. So that means that we're not a fractional bank like every other bank in the world that lends out money. I mean, what happens is if all 5 of us on this panel put $10 in the bank lends out $40 of it, but each of us think we have the same $10, it totals $50. The reality is you don't. So what is important is that in the securities business or in the crypto business, when you transfer something to someone else, you're transferring that whole security. It's a share of IBM or of Microsoft. It's a block of Bitcoin, a block of Ethereum, a block of Stellar. You're actually transferring a physical commodity, or not a physical, a commodity, metaphysical or physical. But in banking, tokenized deposits in fractional banks, you're not doing that. You are transferring a promise to pay. And by creating a narrow bank, what we've done is that you aren't transferring a promise to pay where you're hoping that the whole banking system or the neo-banking system works. With Next, you're actually transferring a dollar, a USD dollar, or whatever other currency it is. That is actually, at an atomic level, revolutionary, and I think that will allow the crypto industry to really flourish.
The big question is now we have a whole debate on whether crypto platforms should offer yield. There's a lot of lobbying from the banks. It's going to be, I mean, interesting. Even your model is really kind of, there's a whole debate we can have on monetary policy and how it affects M1, M2, but that's a whole different panel conversation on that. I'm going to bring it to you, Sabina, just on this point that Scott mentioned. There's 2 follow-up questions I want to ask you on this. First, do you believe that platforms like KuCoin could be actually the bank of the future? Like, if somebody right now, there's obviously narrow banking that Scott is mentioning. I believe that as an 18-year-old today, yes, you can open your bank at one of the traditional banks that we have many in the room, or you go to a crypto platform that you're familiar with, especially that you can go buy your RWA products, get your crypto, get your yield. What's your view on that, and are you seeing interest from clients on that perspective?
I think definitely. I mean, not just crypto platform. You can see that a lot of fintech or digital banks as of today is the go-to for the younger generation already. And then, of course, the younger generation are already trading crypto. And once they're there and they're growing their wealth there, and they will have more demand. And if that become a super app for them, they will access the world of finance through that platform. And that's the distribution channel for a lot of the issuers of financial services.
Are you seeing from your client base right now, is it you're seeing more demand from the retail market, from the institutional market? How are you seeing it, like the user base?
So KuCoin EU itself is actually still not operational at the moment. We've got a MiCA license. We're about to relaunch the platform. And KuCoin Global, of course, it is a global digital exchange. So I probably talk about it more in a more generic way. Yeah. I mean, in centralized exchanges in general, of course, we've seen traditionally a lot of retail there. But of course, in the last few years, the institutional participation and also the drive for them to interact with retail, it's very high. So in fact, centralized exchanges proportion of institutional trading is actually already very, very high. So that's what we have seen in that. But you talked about sort of tokenization, especially on real world assets, and the demand on that, right? So again, I think it is a trend that's definitely going, only one way. That tokenization of real world asset is something that everyone is figuring out how it works. But basically, there are three equations there, right? You've got the infrastructure, i.e., whether everyone who's playing this game are moving on chain. Yep. And then if in the infrastructure of on-ramp, off-ramp, the liquidity, how do we get liquidity on that infrastructure, and many other things in the blockchain space. And then, of course, you need the buyer and seller, and you need the investor, and you need the issuer, right? So on that. So it's three equations on that. For the infrastructure side, I think that is sort of very much so to do with regulation law and also technology. And on the buyer and seller or demand and supply side on tokenized real world assets, and I think you see that in the past few years, a lot of big organizations coming out to do supply, which is
offer products. Yeah.
Totally, and that's worth it though. I mean, you need to find that product market fit, and that's where Stellar and a lot of these chains are doing. But what you actually seeing going forward is that the demand side will be coming towards it, and starting from institutions, from treasury, from a lot of sort of crypto firms, as treasury management, to gradually retail looking at tokenized stocks. And so I think that is the trend we're seeing.
Actually, Martha, I want to bring you on this topic, right? Because we talk about there's demand from institutional investors. Many of you guys in the room have issued now products on chain, the same from private credit to actually T-bills, treasuries, all being now offered on chain. We're definitely seeing that rise. From your perspective, dealing with a lot of these institutional investors, and for many that are in the room actually, do you believe that is the route that many are taking? Or actually it's looking at Bitcoin, like, digital gold that we've had. To be fair, the last couple of months with the war going on, many saw actually Bitcoin didn't react the way we expected it was going to act as digital gold. Do you believe there may be more of institutional investors are going to be more excited about the infrastructure, including stable coins, the payment rails, or digital gold and what Bitcoin and others offer?
Yes, that's such an interesting question. I guess we've seen it in phases. So to begin with, a large part of my job is speaking to very traditional investors, trustees of pension funds that are just starting to look at the space. But we have seen in the last year a real sea change in terms of the knowledge base of these investors and their desire. And this is driven in large part because some of their younger members are coming to them asking for exposure to the asset class. So they're having to come to understand the investment thesis, and even if they don't take a position now, they're just definitely coming up with a view on it. So I think it's become easier and more accepted by these traditional investors to look at Bitcoin, particularly as we've seen the volatility declining. And just this January, we saw we hit a new all-time low in one-year realized volatility. I know it's difficult to fathom given what, the price action we've seen. And we have seen that preceding any new all-time highs, we do get like these periods of low volatility, which we're starting to see again. We saw that in 2023 before we hit the new all-time high in 2024, same in the 2013 and 2017 cycle. So investors are quite comfortable with the idea of Bitcoin and the store of value. And also now, we're getting institutions coming to us more focused as well on the geopolitical angle, particularly in light of events this year and this weaponization that we're seeing, whether it's trade, it's currency, it's strategic commodities, energy. So it's looking for alternative asset classes, and people are starting to consider that. Then the next step, the next evolution from that is maybe we should be starting to look at portfolio diversification. We've seen Harvard Endowment and the ETPs. They allocated first to Bitcoin, and now they're starting to allocate to ETH. So they've always been pioneers in the space, so someone to watch there. But the tokenization theme, what we've been seeing in the last, and this has literally been in the last few months, is that asset managers are really interested in tokenization from a commercial and distribution point of view, what Sabina was saying. There's the cost angle. A lot of the asset managers are under huge pressure to continue to cut costs. They have a lot of competition, but it's also creating additional revenue lines. And we've seen some big financial institutions now starting to take stakes in some of the crypto exchanges to gain exposure to that sort of crypto-native younger audience that, funnily enough, now wants to trade gold and oil and interest fixed income products with a higher yield, because DeFi no longer, you can't get those sorts of yields in DeFi, but you can get them in the real world. So crypto traders want to do that 24/7, and traditional markets are moving more. We've got NASDAQ moving to 24/5, so we're evolving that way in any case. So this is where they're coming from, that angle. And so once they see that utility at scale, because we've seen Ethereum and other blockchains prove that they can handle high volumes at scale in a reliable way, then that gives them more confidence to start experimenting, but in pilot phases. And as Roger was indicating, I appreciate his comment around it's baby steps. Like when we moved from T+5, that was 1993. And then we didn't move to T+3 until many years later, decades later. And now we're moving to T+1. And everything is done, like you have to have pilot programs where everything is very controlled and only qualified investors. And we'll have to have a phase-in until we finally, eventually, in an ideal world, get to native issuance of all assets on the blockchain.
I want to come back, Scott, I want to ask something about this as well. But like, you mentioned, yeah, assets are being tokenized. If I was an asset manager, bank, I would definitely look at tokenizing. We're seeing it right now. But do you believe that world will be accessed by centralized platforms, people are being KYC'd, or the entire DeFi ecosystem as well? You're right, the yields in DeFi are very low right now. Probably the risk reward even doesn't justify it, although the DeFi guys would probably disagree. But like, do you believe that world is going to be captured by the permissionless world? Maybe, Raj, I'll pass it to you on this. Like, especially you guys are so active in the payments and remittance world as well. Like, what are you seeing? Like, do you believe this, the world that Marta was mentioning, will it be done via people that have stable coins and they want some yield? They're going to go play on these, buy some private credit exposure, which, by the way, I don't know they should right now with everything going on. But, or this is going to be done via centralized platforms. They're going to come to a KuCoin and access basically solutions like these.
Yeah, I mean, I think that's like almost the ultimate question, which is like, what does the distribution strategy for all of this look like?
Which was a problem. I mean, that's the whole issue we've had.
Well, frankly, I think that is the most important thing that we need to unlock together as an industry. I think, you know, we've been very fortunate to be able to see on the Stellar side just this rapid growth in real-world asset tokenization. We just eclipsed $2 billion issued on Stellar just this past week, which was very exciting as a milestone. The reality is that the next wave of adoption, I think, comes from the traditional players. And that's really what needs to happen. I think they have to have ultimate comfort with being able to access these assets. They need to be able to find them in places that matter. They need to make sure that those places are relevant to them from a, you know, compliance, regulatory, all of those other places. And so I think you're going to see a lot of that volume growth, I think, through those sorts of avenues, which I think is going to be really important. I think you're going to continue to see some of the crypto nativity, but like, I think that's where you're going to see a lot of that next level of volume growth.
But Salvador, I'll move it to you. I'm coming back to you, Scott, right after this. Do you believe the stack will be able to support this between TradFi and crypto? Obviously, we don't have a unified stack right now, and if you're a TradFi firm, to play on these tokenized assets that Marta has mentioned or Raj mentioned, you need to be able to be playing in them, right? Like, do you believe we are at a level where we could have some unification on that side? And would your clients, you believe if they're sitting on stables, would they be happy to get some private credit exposure via tokenized product?
Yeah, so we definitely think we're heading in that direction, right? So here's what we think. A lot of the money, a lot of the financial activity today happens in traditional institutions. As we try to move into the DeFi world, they're going to need a lot of the assurances, a lot of the interconnectivity. For instance, when you think about tokenized real-world assets, they're basically a digital version of something like I own this, right? Unless you make that digital I own this interoperable with multiple systems, you're not going to get the benefits of like programmability, instant settlement, global by default, the possibility of a public ledger. There are multiple benefits of bringing those things together. And from our end, we actually take an approach slightly different to what Scott was saying. We actually think operability is where this industry is going to be winning. So when we start bringing the best components, the more institutional grade that players like Fidelity need, and we start playing with the new primitives and we integrate them, we believe that's where value is going to be created here.
What's your view on this? I mean, do you believe we'll have that interoperability? And also, I want to get your view on there's a lot of pushback now on stablecoin yield from other banks.
Yes.
What's your view on that as well?
Okay, so I'll give you the easy answer first on stablecoin. The banks will win.
You think so? So crypto
the
firms
banks will win.
So you think Clarity Market Act will not pass?
So putting on an old hat, I used to be vice chairman of the Mid-Sized Bank Coalition of America. I was in the room when the banks would have these conversations. I can give you the long story, but the short story is the banks will win.
Because of lobbying and
because there are in every congressional district, there are banks, there are branches, there is the crypto industry will get wins because it's an important contributor, but it's not making loans to the corner grocery store. It doesn't have the deep fabric that will ultimately take the day. It's totally political. The banks won. I've been saying that since this began. I think it's only a matter of, unfortunately, the crypto industry, certain players in it performed some own goals, which wasn't productive. We don't need to talk about those, but that's not going to be a game changer. That's not going to be an existential risk to crypto. It's more important that the Clarity Act pass because it creates a regulatory framework so you know what the rules of the road are, which is critical, which segues into the second part of your question, which is I think that, and this would take a long time to totally tease out, but identity and reliance is going to be an important part of the future crypto compliant world. When I talk about bringing traditional finance, changing traditional finance to comport with the crypto world, I'm saying that to a degree where you can have trusted parties that do, for example, bank-level due diligence, and then have a walled garden where various actors can say, okay, these parties I don't necessarily know have been previously vetted by bank-level due diligence, then you can feel comfortable acting in that walled garden because Harvard, Yale are not going to, Marta mentioned names of foundations, they are not going to feel comfortable if they think that 2 steps down the chain they're dealing with drug money or human traffickers. It's just not going to happen. And we need to create a framework that allows, again, not like these 2 plugins that I showed in the visual, but allows an environment where institutions can say, okay, I don't necessarily know everybody, but I know they've been vetted. And once we have that, and this will be my final point, what I'm interested in is the $110 trillion procurement market in the United States, the $70 trillion daily trading market. because all the numbers we're talking about so far are great and the trends are great. But if we really want the crypto transformation and use these more efficient rails, we need to go for those markets. And we won't go for those markets unless we fix the underlying atomic problems.
Yeah, but I would argue that there's a lot of tools now to deal with this on the compliance side. And if we create a whole closed framework, in a way, it defies the idea of decentralization that we have. And
But it doesn't need to be, I just will say this,
Yeah.
it doesn't need to be one. It just
Yeah.
needs to be you have different trusted parties. I'm not saying everybody has to go to Next.
Yeah, yeah. So in a minute, Marta, I want to pass you, and I'm going to bring it to you to finish it off. And Marta, on your side, is this something you're seeing demand from institutional investors? Before you mentioned diversification, moving out of the US because of all the attacks happening on Iran and everything going on, is this something you see that is demand from clients, this need of compliance? We need to make sure it hasn't touched any illicit activity and stuff.
I think earlier on we were getting more questions again around money laundering, and even before that it was energy, and now lately it's been quantum.
Yeah,
so
exactly.
there's always something that investors, that's their job. They have to look at. I used to be an investor myself. You have to kind of put your skeptical hat on and what are the risks involved. But not really. We're not seeing that. I just had a follow-up comment on the Clarity Act, and we'll see what the markup brings in the Senate at the end of April. It would be really positive to get that through. However, I would say that what the SEC and the CFTC are doing is really encouraging that they've been showing that they can do quite a lot. And we had just the DeFi Safe Harbor, announced a few days ago. And regardless of that, institutions are making concrete investments and announcements, despite the fact that there's no guarantee we have a national framework. So I think as we integrate with mainstream capital markets, it'll be harder to unravel that. The cherry on the cake would be getting the Clarity Act, but we're still seeing the investors with interest, and they're not scared off by this anymore. I think that we're beyond that point from our point of view.
You run the EU MiCA regular business. We have a big European crowd here as well. Is Europe going to benefit from this? If this all the regulation goes through the US and stuff, like you're obviously running the business here, right?
So Europe had MiCA, and we got MiCA a while ago, and then in the previous panels talking about having a MiCA 2.0 and stuff. I think EU has been quite progressive in crypto regulation, and I think the adoption for crypto exchanges to that would take time. Everyone would need to understand what that is, what it actually mean in practice, and what is that gap between a crypto firm versus a traditional finance firm, which is so used to all these rules, right? But I think Europe has tremendous potential. It's a huge population, and it has a very institutional client base, which is sophisticated, and it's great for the infrastructure. And ultimately, I think Europe is talking about growth, and we're talking about growth probably in traditional finance market compared to US, and it's a bit of sort of self-criticism. But I think in crypto, in a lot of countries, regulators rise up and really welcome that growth.
It's optimism today on that side. Here we go.
Totally. And there's so much entrepreneur in Europe that we are going to make this the next wave of growth together.
So we can have a whole debate on that topic as well. But guys, I'm going to go with my fire round of questions. I'm going to ask you quick questions. Marta, I'm starting with you. And I need 1 or 2 word answers. You guys normally have a bell. My bell is stuck in Dubai now. I cannot go back. But I'm going to ask you quick questions, and I need 1 2 word answer. You guys are ready? Marta, I'm starting with you. And I'm going to ask the same question to go down. What is the one thing that is exciting you the most about the crypto industry right now?
Tokenization.
Tokenization. Salvador.
Interoperability of primitives.
Ooh, here we go. Raj.
The re-rise of local currency stables.
Local currency stable. Yeah, that's a whole world that's opening up. Very exciting.
Gaining the traditional procurement, trading, shipping, logistics markets, and making them part of the crypto world.
Sabina.
Localization in Europe.
I'm starting with you. If you could go back to school right now, knowing what you know about the future of finance, and there's one topic you would study, you believe knowing what you know about the future of finance would be relevant, what would that be?
Blockchain.
Blockchain, there you go.
Math until you can't take it anymore.
Good, here we go.
I want to be a dancer like you were.
It's good for flexibility as you get old, that's for sure. Salvador.
Advanced cryptography.
Yeah, very good. Marta.
Fashion. No, I'm kidding. blockchain and AI.
President Trump gives you a call, asks you for one piece of advice on crypto. What do you tell President Trump? Martha, I'm starting with you.
Get that Clarity Act passed.
Salvador.
Yeah, clarity on regulation.
Raj.
I think that's the right answer. Get regulation.
Clarity Act.
Working with the rest of the world.
Oh, here we go. Oh, man. Very charged question on that, but I wanted to finish it off, guys, in 2 seconds. My last question, I ask this anybody who comes on my show, you can have lunch or dinner, one person dead or alive, lunch or dinner with one person dead or alive, in crypto or in any other industry, who do you have lunch or dinner with? I'm starting with you, Sabina.
Probably you, actually.
Hear me? Oh, my God. I can do it right now if you want. Here you go.
Moses.
Moses, my God. He was written by somebody who's written 3 books on philosophy. Makes sense. Raj.
That's hard. Boutros Ghali.
Boutros Ghali. Here you go. The UN.
Yeah.
Probably the most famous Egyptian out there. Here you go.
Satoshi.
Here you go. Hey, maybe he's here at the conference based on the New York Times article. And to finish it off with our forecast for 2026 at this Para Blockchain Week 2026, Martha, if you could have lunch or dinner with one person dead or alive, who would you have lunch or dinner with?
Nelson Mandela. If you've been to, is it Robben Island, where he was in prison? Very inspiring.
Here we go. Guys, thank you very much. That's all the time we have today. Thank you very much. We'll pass it back to the MC.
Welcome to Signal Week.